Welcome to the Deep Dive. We're the show that digs into earnings calls to pull out what really matters for experienced investors like you.
And today we're looking at Credicorp Limited. Their Q2 fiscal 25 results just dropped.
Yeah, and it was a really strong quarter. We want to unpack what these numbers, their updated guidance, and some pretty bold strategic moves actually mean.
Exactly, because it's more than just good numbers, right? For you listening, understanding the why behind it is crucial. Credicorp isn't just, benefiting from Peru's economy.
They seem to be actively changing their own game, especially with digital.
Definitely. So let's jump right in. The headline numbers themselves tell a story.
Okay, lay them on us. GAAP EPS
came in at $6.41, and that was a solid beat, sailed past consensus by $0.43.
43 cents, nice. And the top line, revenue.
Also strong, $1.59 billion. That's up 8.65% compared to last year.
Wow.
And beat estimates by about $26.5 million. So yeah, solid beat all around.
Okay, so beating on top and bottom lines. What about profitability underneath that?
That's where it gets really interesting. Net income was $1.82 billion. That surged, really jumped 36% year over year.
36%, that's huge.
It is. And that translates directly into a quarterly return on equity, the ROE, of 20.7%.
Over 20% ROE. That puts them pretty high up in the region, doesn't it?
Absolutely. Top tier, shows really exceptional capital efficiency. And, management seems to be executing very well.
And that efficiency, it's not just cutting costs, right?
Yeah.
It seems tied to how they're making money, too.
Precisely. Which leads us to something quite remarkable in the results. A record risk-adjusted net interest margin, NI.
Record level. What was it?
5.44%. And this was alongside a really low cost of risk, just 1.6%.
Okay, so making good margins even after accounting for risk and net interest income itself.
NII grew a solid 4.2% year over year. Even the non-performing loan ratio, NPLs, were held around 5%.
Big coverage, too.
Yeah, robust coverage, 109.5%. So it all points to a very healthy, well-managed loan book.
But you mentioned digital earlier. How does that tie into these strong financial metrics?
Well, it's becoming absolutely pivotal. Take YAPE, their mobile payment platform.
Right, YAPE. It's everywhere in Peru, I hear.
Pretty much. Around 15 million monthly active users now.
15 million. What does that mean in context?
Think about this. That's roughly 75% of Peru's entire economically active population.
75%. Wow. Okay, that's incredible scale.
It is. If you're working in Peru, odds are you're using YAPE.
So massive user base.
Yeah.
But is it making money yet? Is it actually contributing, or still mostly about growth?
Oh, it's definitely contributing now. YAPE's lending services, for example, they've already reached about 3 million users.
3 million borrowers through the app.
Exactly. And here's the key number. That lending contributed about 5.5% of the entire group's risk-adjusted revenue this quarter.
5.5% of group revenue just from YAPE lending.
Yeah.
Okay, that's significant. It's not just a side project anymore.
Not at all. It's proof the monetization strategy is working. It's becoming a real revenue stream.
So these great numbers, this digital success, it suggests management is feeling pretty good. What are they signaling about the future?
Well, they're definitely confident. They actually raised their full year 2025 ROE guidance.
Raised it to what?
To around 19%. Now, they did point out that includes a little boost, about 50 basis points, from selling their stake in Valmedica.
Okay, a one-off gain in there.
Right. But maybe even more importantly, they also boosted their long-term sustainable ROE target.
Oh, what's the new long-term goal?
Up to approximately 19.5%. That's up from 18% before.
19.5% sustainable ROE. That signals real conviction they can keep this higher profitability going.
Yeah.
Through the ups and downs of the economy.
Exactly. Deep confidence. And they're pretty clear on how they plan to do it.
What are the main drivers then?
It boils down to a few things. Focusing on a higher yielding mix of loans, staying disciplined on risk even as they grow, and crucially pushing forward with monetizing those digital platforms like YAPE.
So optimizing the whole machine for profit, not just playing defense.
You got it. And that digital piece is central. Let's dive back into YAPE and also Tempo.
Right. Tempo is their new digital bank, isn't it? Still coming soon.
Impending launch, yes. But YAPE first. We mentioned the scale, 15 million users, 75% penetration. It's just a massive digital footprint.
We're a real challenger.
And the monetization is getting more sophisticated. That lending piece we mentioned, it actually made up 18% of YAPE's total revenue.
18% of YAPE's revenue from lending alone.
Okay. And the 5.5% of the group's risk-adjusted revenue. So it's not just about payments anymore. It's this Strategic move to high-frequency fees, lowering customer acquisition costs, and really getting deeper into the customer's wallet.
Building an ecosystem. And they launched something called theme loans recently.
Yeah, in June. Think higher value, maybe longer-term credit products offered right through YAPE. It shows they're expanding the types of lending they can do digitally.
And then Tempo comes along.
Right. Poised to take this whole strategy from payments and small loans into full-blown retail banking. It's a potentially game-changing move for them.
So this whole innovation portfolio, YAPE, Tempo, whatever else is in there, how much is it contributing now and what's the target?
Good question. In Q2, it was 6.2% of risk-adjusted revenues. The target, 10% by 2026.
10% by 2026? Ambitious.
And get this. The long-term vision they laid out positions YAPE to become their second largest business line, right after the main bank BCP.
Bigger than their insurance or investment banking?
That's the plan. Within the next, say, 3 to 5 years, driven by lending, but also moving into marketplace and e-commerce functionalities within YAPE.
Okay, this is maybe the most important point for investors then, the digital investments, which probably cost a lot upfront.
Historically a drag on earnings, yeah.
They're now expecting them to actually generate positive ROE beyond 2025.
Correct. That's a massive shift. These big bets are moving from costing money to making money, fundamentally changing the investment profile.
Okay, so digital's paying off. They're leaning into potentially higher yielding loans. What does this mean for risk? How's the asset quality holding up?
Well, looking back year over year, there's been a pretty significant improvement, actually. The NPL ratio tightened to 5%, and that cost of risk dropped to 1.6%.
1.6% is quite low. Do they expect it to stay there?
Not quite. They did signal they expect a slight increase in the second half of the year, maybe closer to 2%.
Why the increase?
Mostly because they're ramping up that retail loan origination, particularly through digital channels. It's part of the strategy.
Right, so slightly higher risk, but hopefully higher reward too. The full year guidance is still manageable.
Yeah, the guidance for the full year is 1.8% to 2.2%. What they really emphasized is that they're focused on optimizing the risk-adjusted NEM.
Not just minimizing the cost of risk itself.
Exactly. It allows them to consciously go after those higher-yielding retail and microfinance segments, knowing they have the tools to manage the risk.
What about overall loan growth? Did the book shrink?
On a quarter-end balance basis, yeah, total loans dipped 4.1%. But if you adjust for currency fluctuations, the underlying growth was actually positive, 2.6%.
Okay. And what are they targeting for the full year?
For the end-of-period balance for FY25, they're targeting 6.5% growth, so expecting a pickup.
Interesting. Anything else on the funding side? Deposits.
Yeah, one quiet but important point. The share of low-cost demand and savings accounts in their total deposits actually increased. It's up to 40.6%.
What does that tell you?
It tells me their digital strategy is working on the deposit side, too, attracting sticky, cheap funding because of the convenience and trust they're building, especially with YAPE.
Okay. Now, we have to address the elephant in the room, maybe, the SUNAT tax dispute. Big numbers involved there.
Yeah, roughly S1.6 billion, which is about $452 million US. These were tax and fine resolutions from SUNAT, the Peruvian tax authority.
And the latest news was they were canceled.
They were canceled on August 14th. However, and this is key, Credicorp actually went ahead and paid that amount the same week.
Paid it even though it was canceled.
Well, they're still fighting it legally. They continue to challenge the resolutions, saying they have strong legal and technical grounds and view the chance of ultimately having to pay as remote. But the payment itself happened.
So a big cash outflow right now, even if they expect to maybe get it back later.
Exactly. And the immediate impact for investors is that this cash outflow constrains their ability to pay extraordinary dividends in 2025.
But their regular dividend?
Their ordinary dividend policy remains unchanged. That's important. It's really a balance sheet event for now, impacting cash, not a hit to their core earnings power.
Okay, that's a crucial distinction.
Yeah.
Let's zoom out from Credicorp itself for a second. What's the broader environment like in Peru? Are there tailwinds helping them?
Absolutely. Peru's economy is actually in a pretty constructive spot right now. You've got historically high terms of trade.
Driven by?
Strong prices for commodities, Peru exports, gold, silver, copper especially.
Okay, good for national income. What about inflation and jobs?
Inflation is behaving well. It's below 2%. Real wages are recovering. Formal employment is growing. It provides a solid base for consumer spending and, credit demand.
And overall GDP growth?
Expected around 3% this year for Peru overall. But domestic demand, which is maybe more relevant for the bank, is expected to grow faster, maybe around 4.5%.
And interest rates, have they finished cutting?
Looks like it for now. The central bank made its last cut back in May by 25 basis points, taking the policy rate down to 4.5%. So a fairly supportive monetary environment, too.
So a good macro backdrop. Now, back to Credicorp's own actions. You mentioned digital, but are they making other strategic shifts? What about physical branches?
Yeah, that's another big change. BCP, their main bank, has significantly reduced its physical branch network.
How much?
By about a third. They went from around 450 branches down to roughly 300.
Wow, closing 150 branches. That's a statement.
It is. And they're clear about why. They're shifting the role of the remaining branches, less about routine transactions.
Which people now do on YAPE or online.
Exactly, and more towards being centers for advice, education, and more complex sales. It's a fundamental rethink of the branch's purpose.
Makes sense. Anything else on the tech front? AI?
Oh, yeah, they're embedding AI and data management pretty deeply across the board. It's not just talk.
How are they using it?
Several ways. Improving customer experience, think hyper-personalization, better chatbots, boosting internal efficiency. They mentioned using AI co-pilots for things like coding and seeing productivity gains over 30%.
30%, that's significant.
And also using AI for strategy, identifying new market opportunities, improving risk management models. It's about using tech for a real competitive edge.
Okay, let's tie this all together for the listener. What's the key takeaway context here?
Well, Credicorp's strong results and that upbeat guidance are happening just as asset quality is generally improving across Peru and demand for retail credit is picking up. So they're executing well into a recovering market.
And the digital piece, YAPE's growth.
It's really important. It shows financial services penetrating deeper into the population, and it's expanding the potential fee pools. Credicorp, being the leader here, is really well positioned to capture that shift.
And that focus you mentioned, on risk-adjusted income, not just cost of risk.
That's a critical signal for you to understand. It shows a sophisticated approach. They're willing to take calculated risks in higher yielding areas like retail and microfinance because they believe their data and processes let them manage it profitably. It's about smart growth.
So looking ahead to the rest of 2025, what should people be watching? What are the key catalysts?
Few key things. Can they deliver on that 6.5% loan growth target? Will they hit the 19% ROE for the full year? What are the next monetization steps for YAPE, especially progress on the marketplace side? How does the launch of Tempo go? And of course, any definitive news on that SUNAT tax dispute resolution.
Got it. Now, the stock price didn't exactly rocket after the call, right? Only up slightly.
Yeah, up about 0.61% immediately after. But you have to remember, Credicorp has delivered really strong returns over the past year already, so a lot of good news was likely already priced in.
But the raised guidance and the positive trends.
Keep the overall story pointing upwards? Exactly. The momentum seems to still be there.
Okay. So for everyone listening, analyzing the investment side, given this strong digital push and the bullish long-term outlook, let's play our little game of what if. Time for some trade ideas. Remember, this is not financial advice.
Definitely not advice, just thought experiments for your own rigorous process. Okay, idea one. Consider going long Credicorp, ticker BAP, maybe paired with a short position in a Peruvian real estate ETF.
Interesting pair. What's the thinking there?
It links back to that branch reduction we talked about. They cut from 450 to 300 branches. They said the bulk is done, but also kind of hinted the world is changing fast.
So maybe more branch closures or downsizing to come.
Possibly. If digital keeps accelerating, they could unlock value by selling off more of that prime urban real estate. So the trade is basically a bet on Credicorp successfully shifting capital from physical branches to those high-return digital platforms like YAPE and Tempo, while betting against the value of the underlying commercial real estate that traditional banks rely on.
A digital disintermediation play, essentially. Okay, what's idea two?
Idea two. Again, long Credicorp, BAP, but this time paired with a short position in a basket of other more traditional Latin American regional banks, specifically banks that aren't showing the same kind of aggressive digital wallet growth and clear ROE boost from innovation that Credicorp is demonstrating.
So betting on Credicorp as the digital leader pulling away from the pack.
Exactly. This is purely a future of finance narrative in LATAM. Credicorp explicitly said they're shifting to a model where fees, engagement, and scalable innovation are just as critical as old-school lending. If they execute, this could create a real valuation gap between them and the less agile competitors still stuck in the traditional mold. It's a bet on, digital Darwinism playing out in the region's banking sector.
Fascinating ideas. Okay, let's wrap this up to summarize.
In short, Credicorp's Q2 showed really strong financial results. It's fueled by both a recovering Peruvian economy and, maybe more importantly, their successful execution on the digital front, especially with YAPE's scale and now its monetization.
And that increased ROE guidance, along with the solid credit metrics, it really underscores management's confidence that they can sustain higher levels of profitability, even with that SONAT payment impacting near-term cash.
Absolutely. They seem to be actively shaping where finance is heading in the region, using innovation, focusing on inclusion through YAPE, and leveraging data much more effectively.
Okay. And as always, we need to say it again. This has just been our analysis of the earnings call. It is absolutely not financial advice.
Please do your own homework, run your own numbers, and talk to a qualified professional before making any investment decisions based on anything you hear here.
So reflecting on all this, what really strikes you about Credicorp's pivot? Is this acceleration towards digital profitability a template others in the region have to follow? Or is Credicorp carving a unique path? How might this reshape banking across Latin America in the coming years? Something for you to think about.